Kyle, welcome to episode 2 of COVID Conversations. It feels weird to be doing this virtually with you because usually we're sitting shoulder to shoulder on camera, whether we're filming pre-licensure courses, continuing ed courses, other online training together. But this is our first formal distance training that we're recording together.
Yes. So thank you for having me, but I'd rather be sitting next to you like normal.
Well, in these times, it doesn't seem like we're going to be sitting next to each other anytime soon, unfortunately. But for today's session, what I'd like to talk about is what you're seeing from your experience as a real estate attorney here in Boston as it relates to new business practices, the real estate market, and just sharing general updates on any regulatory updates that you've become aware of that is new due to Corona, or COVID rather. So Kyle, can you tell us a little bit about something that has significantly affected your business or the industry in general?
Well, COVID has, clearly, which is why we're talking today. The two biggest things, or I guess three, when property is being sold, you fundamentally have to have other third parties visiting the property for certain state required things, federally required things. Lenders need appraisals to justify fundamentally the loan to value ratio that borrowers are seeking for their underlying loan and corresponding mortgages. So an appraisal on site usually is a critical aspect. I'm not a lender. I don't have any direct appraisal contacts, but I've heard that appraisals are kind of being shifted to, drive-by, more remote type appraisals, which seems, fairly risky to me. Not knowing necessarily what the interior of a home looks like and appreciating or appraising its value seems, I don't know how you kind of overcome that impasse. Because fundamentally, the appraised value, the fair market value of the property is determined by an appraiser, is critical to the lending aspect of it. So appraisals normally on site by an appraiser. You have to, it is a state requirement that the local municipality send out a representative of the fire department to inspect to ensure that the right smoke and carbon monoxide detectors are in place. That is a state requirement, and that has to happen for the conveyance or sale of residential real estate before the sale. And a prerequisite usually to closing on a home is that you have that smoke detector certificate in place, in hand. And with tight time frames in the normal real estate market of people, on average putting a property under agreement through closing in potentially sometimes, 4 weeks to 5 weeks, maybe sooner. Already normally interfacing with a fire department to schedule that after you have a property under purchase and sale before closing is already a sometimes difficult thing to do, and times are tight. In this day and age, with I imagine municipalities and staff of a municipality running lean with not as many people being operational, I imagine everything is delayed. So just the actual logistics, if municipalities are still performing the smokes, is significantly more difficult. And some municipalities are inspecting, some are not currently. Boston is currently getting representatives of the fire department out for inspections. While my business is predominantly, I would say, Boston-based, Suffolk County, Middlesex, we do help people throughout the state. So I would say the vast majority of my client-related purchases and sales, a smoke detector certificate is still being obtained, but the reality is that they will not be able to logistically for every single sale. So the governor, one of the quicker things that he did was potentially pass on the obligation for the delivery of that smoke and carbon detector certificate from the seller as a prerequisite to closing, to, if a buyer so elects, the buyer can absorb that requirement, and the buyer will then be required to obtain and deliver the smoke detector certificate within 90 days of the state of emergency being lifted. And I don't necessarily know when that will happen. I mean, the stay-at-home order is being lifted, at least in the Boston area, the 18th of May coming up. But upon election, a buyer can agree to absorb that requirement, which means that a closing can still proceed the deeds can be recorded, documentation can be passed, seller proceeds can be released. We can go to record with documents without having the smoke detector certificate in hand. It hasn't eliminated the need for it, but it just transfers it from being a prerequisite to closing, an obligatory delivery of the seller, to something that the buyer can absorb and have to satisfy after closing.
Having the smoke and CO cert is critical, but it's not holding up closings at this time because the buyer has the option to absorb it. Are there other contingencies that are not being met, or that being waived entirely? It sounds like the appraisals with these drive-bys, I've not seen a drive-by appraisal. I probably wouldn't see it because it would be quick, but are there other steps in the conveyance process that are significantly affected, that are actually affecting the time to close?
Logistically, I'd say not too much yet. It seems as though a lot of the lenders, we're working remotely. Not every attorney, but I guess conveyancing attorneys, people need to still be able to keep buying and selling, refinancing. People's lives are, revolve around access to their ability to sell, obtain financing, pull money out in refinances, et cetera. So we are still deemed to be essential personnel. So to that effect, we have to continue working. Very fortunately, the firm that I'm aligned with in helping two people buy and refinance, they were already predominantly online driven, cloud-based operations. So we'll talk more, I'm sure, in this conversation about what it looks like on a day-to-day basis. But the lenders that we still work with are still pretty nimble. Things may be slowed down a little bit. I advise all of buyer clients specifically, before committing to the same normal timeframes that people would be utilizing through closing, please confirm these things with your lender before you sign a formal offer. Make sure that they're still able to turn around a commitment deadline and closing in 4 to 5 weeks. Because in combination with people working remotely, given the fact that we have the Federal Reserve has reduced arguably interest rates, and interest rates are now at potentially all-time lows, what almost amounts to free interest rate or interest-free money. Refinances, we're being told by the lenders that we work with, are at decade time highs. So lenders right now are absolutely swamped with new applications, which means that you're not one of as a buyer in the new application, their application is now buried amongst others. So for combinations of reasons, buyers and people seeking to refinance should confirm that they can commit to certain timelines before they sign offers, et cetera. So logistically, things are still proceeding, and amazingly, I feel like things are still relatively on track. Looking at real-time delays of maybe about an extra week or so, 10 days. Refinances are taking a little bit longer because they're maybe being deprioritized a little bit, but everything is still relatively on track.
So in a traditional closing, the parties, being the closing attorney and the buyers, at the very least, are in the same room together to sign documents. If anything needs to be notarized, they would get notarized in the same room with social distancing and stay at home. And how are you handling these types of situations where documents have to be signed and witnessed and notarized, et cetera?
So for a person that has not gone through this process before, when a buyer sits down in a room to sign loan and mortgage related documents, we're not talking about 1 or 2 or 10 documents. We're talking about 40 or 50. We're talking about 100 plus pieces of paper on average, and that's assuming that there's only one mortgage. If there's a secondary mortgage, we're talking about 150 pages on average. So my role, being a notary myself, every time you have title related documents, deeds, mortgages, etc., for the fundamental reason of trying to eliminate or mitigate the possibilities for fraud, these documents have to be notarized, which means wet inked signatures in the presence of a notary. My job as a notary, and all notaries, are to obtain identification of a person, confirm that they are the people that are in fact signing, confirm that they are doing these things voluntarily, arguably try to flush out that they understand what it is that they are signing and the function of it. So that is a physical requirement of title-related documents, namely the mortgage and from the seller's side a deed. And that requirement has not gone away. What they have recently adopted is, unlike the executive order signed by the governor regarding the smoke and CO detector requirements, the state legislature actually proposed and the governor adopted and passed only as of about last Tuesday, an order that permits remote notarization, which means that theoretically the borrower, the buyer, need not be in the room with the end notary, usually the attorney. However, even though that has passed, we have had time to review it now. Lenders, attorneys have had the ability to roll with that and see how it looks. And unfortunately, and I'll elaborate as to why, the end result is that the remote notarization bill in practice is not very realistic. And so we've already had lenders of ours who have said that in the closing process, in doing our job, and one of our jobs is to represent the interests of the lender, that they will not allow our law firm to utilize it in the process. So if the whole process is driven by the lender and the origination of their loan for a buyer to purchase property, if a lender says no to our ability to utilize the remote notarization bill, in effect, it is of no value to us. And so we have not had a whole lot of requests for it yet. What we have been doing is, fortunately, our office space with very little people coming to work has a very low density. So with the ability to kind of clean and sanitize, we've still been able to do things in office. Our preference has been to have clients come in vehicles and conduct at least hand paperwork through a window, let them close their window, speak to them remotely, have them on the phone, etc. Still being able to visually see them signing documents, walking them through the paperwork. So people have been closing in their vehicles. Our main office, because of nobody coming to the office space, we have parking garages that are otherwise vacant. The landlord for our office space has kind of cordoned off some areas for us to have people come out of the rain into the garage. We have some temporary tables set up, which we can continue to clean and sanitize. So we've been doing a lot of car-based closings, and that's a little bit more controlled, somewhat more open air. What we have specifically been discouraging is in-house closings. Closings in, a lot of times we might close in the offices of the brokerage companies that we work with and those real estate agents, because we cannot physically control that environment, and every brokerage company may operate differently. So we have not been conducting in-person, in-home closings, so that ideally if I am closing in a borrower's home, I'm not exposed to something potentially in their home environment. And then also conversely, they may have a very controlled environment themselves. And if I am unfortunately exposed and I am bringing something into their household, and we are then exposing their family, then potentially, A, we don't want that, and B, also potentially maybe somewhat liable for it. So we like to be as accommodating as possible normally, driving two people, closing in registries. Arguably, a registry is closer to the physical property than maybe where the buyer or I am situated or our law firm is. Registries are also, as far as I know, entirely closed for in-registry closings. So generally speaking, we would close at a registry. We may close at a brokerage office of the agent working with our respective client. Those two things are not necessarily possible right now because a lot of brokerage companies are closed. Registries are affirmatively closed. So our other option is then to close in people's homes, which we have been discouraging or largely saying no to unless there's an extenuating circumstance, and preference also being our office. And then to elaborate, take one more step, registries also, in the end, we have to give title documents to the registry for recording purposes. When you actually record the deed, that is when the lawful title transfers from a seller to a buyer. That's also when we deem the closing to actually occur as the recording of a deed and the corresponding mortgage. We have to get those documents to the registry, and there are two ways that land is held. We have what is called recorded land. We have registered land. Registered land is much more infrequent, maybe, to give people a number, 1 in 15, 1 in 20 potential transactions involves registered land. Registered land is regulated by the Land Court of the state of Massachusetts. There's some more formalities required. Recorded land, which is much more common, fortunately for us now, registries will accept deeds and other title documents electronically submitted. Registered land, for the most part, requires these documents to be hand filed at the respective registries. They physically need the originals in their possession. So we electronically submit recorded land title documents, which is the majority of the time, that we have to physically do from our office. So if I sign with a borrower in, let's say, Plymouth County, and we have to physically drive back to our Needham-based office to scan things in to then submit to the registry, that takes time. So ideally, if a borrower is willing to travel to us, to one of our offices, we can process those things, scan them, get them electronically submitted to the registry in more real time to avoid delay, so that people hopefully become the owner of their property, the record owner of their property, the day that we sign.
So the process is potentially slower, but it sounds like you've found ways to help sort of re-expedite to get things done by moving things to your office or to facilities that you can control and get documents scanned in and submitted in a timely manner, because you don't want someone else to be able to get to record before you do with other documents that might create a problem for you.
Well, if we are representing a buyer and their lender, we are in control of and responsible for the recording process. So there's not a race from different sides, but we have to take documents from a seller, documents signed by the buyer, and comprehensively submit them. But if the objective is that a lender provides and extends the loan and a buyer is delivering their financing, their closing funds, we ideally on the day of signing want them to also become the record lawful owner of their property. And so to try to avoid delay in that process, with the only option being to electronically submit documents to the registries, to be less accommodating also means that we have a greater likelihood of being able to get documents electronically submitted and on record that day. So the net result is we can't close at registries. We don't want to close in people's homes for liability reasons and for exposure to them and them to us. So to be less accommodating means that we have a greater likelihood of being able to effectuate the process on the day of closing. So we like to be accommodating, but our ability to do so is kind of limited right now.
So I'm also a real estate broker, and I've been talking with my clients about sort of what their feelings are towards actually purchasing a property or selling their current home. In some cases, they have to sell their current home to be able to afford a new home. And it's interesting that they don't share the same concerns that I thought most consumers would share, and that I thought people would be holding off on buying to see how where the market goes, holding off on selling their homes. And at least here in the Boston area with the clients that I'm working with, it seems like they are almost unaffected by this. Their lease is coming up and they want to find a place so they don't have to re-sign their lease again. Or there's a home that they like, then they have to sell their home first. So, they ask questions around what is it going to be like to show our home, because we're concerned that people are going to come into our home and we don't know who they are, if they're sick, if they've been sick, if they might be getting sick, whatever it may be. How have you noticed any shifts in the pace of properties coming to the market or transactions maybe that were in process that got delayed? Have you seen the difference, shift in the volume of transactions and the speed and just, generally how quickly clients are moving? Or is everyone just sort of on the same page and understanding that we're going to work through this as quickly as we can, but delays are delays and they're outside our control?
Well, being a real estate attorney, I'm kind of one step removed from the brokerage agent role, which is kind of directly interfacing and establishing those timeframes. I, as the attorney, kind of react to it once I'm presented with a client that has an accepted offer. So generally speaking, and I do work with an owner of a local brokerage company who has about 80 or 90 agents working under him. And we've had a lot of conversations in active deals, even in light of the current situation in COVID. their volume of business approximately, and this may have been a couple weeks ago at this point, a week or 2 weeks ago, was down easily by a half, maybe closer to 2/3 or 3/4. So I'd say that the volume of active listings and people putting things under agreement is, I would say, down still conservatively by probably about a half. That being said, if people are getting out of leases, if their only alternative is re-extending for another year, the demand for homes and buying a home doesn't go away. If people have the latitude, if people have the ability to prevent putting their home on the market now and delay that process, I feel like that's something that if those people have the options of, they will. If somebody's moving because of a job and going to the West Coast, they don't necessarily have that option. Their job starts when it starts. But if somebody's looking to just downsize or buy a little bit, something a little bit bigger, or move because 3 years from now their kids are going to be going into into schooling and they want a better school district, if they have the flexibility, and this will get back to another point, but homes are selling quickly, but if there's less things available to buy and they need to relocate locally, if they're able to sell successfully, are they able to successfully then purchase the replacement home? That is, I'd say the likelihood of that is probably reduced. So because of the lesser volume of things right now. So I think if people have the ability, they are delaying. And at least from what I know from speaking with the broker owners and agents that I work with, is that the volume is down. From our side, we're seeing 10-year highs for refinances. So we don't have, and I don't have as many active people selling and buying, but we do have 3 to 4 times the number of people actively looking to refinance. So we are still busy on the refinance side, not as busy on the maybe active purchasing and selling side.
So shifting gears, we had a conversation previously with attorney Cole Young here in Boston, and he shared just some interesting insight about what he's learned about himself and his practice and how his back office operations have changed between pre and our current situation. What have you learned about yourself and your practice, and has anything materially changed in the way that you conduct business besides the parking lot and car closings?
Well, fortunately, I'm a little bit younger than maybe some other conveyancing attorneys, not that they can't adopt different practices, but my practice from the inception was more nimble remote working. So I carry around my laptop, I scan everything. We don't have normally massive paper-based files anyway. So if I have everything, I already opted to utilize Google. And so I have everything on, the cloud, Google Drive. I'm also, in addition to having my own firm, I'm also of counsel with a larger conveyancing firm. They are the ones that help me with refinances and purchases. And fortunately, they had already kind of been an industry leader, not a lagger, in adopting a new kind of CRM file maintenance platform that allows them to, once again, store everything on a cloud-based server. And so they fortunately had already been going in this direction. And so we already utilized the e-recording system as opposed to FedEx, courier, hand delivery. So fortunately, a lot of the tools that we already had adopted have allowed us to work more remotely. So the workforce can do everything remotely, et cetera. That all being said, the loan origination, paper signing process is still very paper heavy. So we get a closing package of 100 to 150 pages of paper. We have to meet with a borrower and have them literally sign everything and notarize those things. We have to then scan it and process it. Usually, I'd say it's a large majority of our lenders want a decent fraction of that signed paper back the day of signing before they will, and they want to review it and confirm that it's been executed correctly before they will let us submit those documents electronically to the registries to then transfer title. So there's a lot of back and forth that has to happen in a short period of time. Buyers, when they sign paper, they don't become the owners at the time that they conclude signing. There's another 2 to 3 hours of normal real-time things that have to happen before those deeds and those mortgages are accepted and publicly available and recorded with the registry. So to make that still happen the same day of closing just requires the same process. Fortunately, we're able to do those things electronically based upon prior practices, but we still have to obtain and process these files, scan things back to the lender, scan them into our system, save them for our purposes, and then ultimately transmit them back out to their lender. So you walk into any conveyancing attorney's law firm, you will still see stacks and stacks of files and paper, et cetera. So for me, scanning everything works to a certain extent. I can walk around with my laptop and work remotely, arguably from anywhere. But we still have to, for the conveyancing firms that help people to buy and refinance, they still have to process all these things. So we still have to have some support staff, paralegals in our office to be able to generate these stacks of paper and then ultimately process them after we've been done meeting with the borrower.
So to wrap up the conversation here before we go, is there any tips or best practices or warnings that you want to provide to real estate professionals that are operating out there, whether they're brokers, agents, in other areas that can make your job or future steps in the process of conveying property easier, whether it be certain COVID clauses or just any other practices that would be better to address earlier on in a transaction before it gets to you? So,
as of late, keep in mind, we've been dealing with this now for the past, 4 to 6 weeks at least. I am seeing certain COVID smoke-related clauses in offers. Usually the attorney, as myself, we will get looped into a process after an offer is accepted. So I can only usually control language, documentation, clauses after I have something in my possession to review. So a lot of the times, there were standard attorney provided COVID and smoke related clauses as part of a purchase and sale, which happens after an offer to purchase in Massachusetts. I have seen offers coming in as of late that actually have in the offer smoke and COVID related language. So it may be good to establish that footing at the offer phase as opposed to in the purchase and sale. That being said, I have buyer clients, I have seller clients. I try to draw an even line. I want to be fair in all circumstances. If I'm representing a seller, I don't want to play hardball when on the opposite side, having a buyer client, I'm the one who is being played hardball against. So we're trying, most conveyancing attorneys that I know are trying to draw kind of an even line in the sand so that we are trying to be fair on both sides. And that usually means that this language is kind of fair. And, specifically, if a buyer elects to absorb the requirement of the smoke and CO detectors, as we talked about, usually a modest holdback of seller proceeds is held in escrow so that when the buyer ultimately gets the fire department out site, if they have to spend money to put in another smoke or CO detector, the cost of the actual installation, those costs are still borne by the seller. So language related to what happens in that circumstance, monetary holdbacks, reducing those things to writing. There are REBA holdback clauses and provisions, but if agents want to adopt language related to that in the offer, I think it's a smart idea just to establish the path moving forward. So if agents don't have those things, if their broker owners don't already have approved clauses, ask the attorney that you're working with for related language, and you can include that.
Not a good idea, though, for any licensee, being a broker or an agent, to come up with their own language. It sounds like it's much more involved than something.
It's not a simple sentence. It's usually a couple paragraphs worth of related language. So best thing to do is, hopefully a broker owner is already on the forefront. Hopefully they've already communicated with an attorney that they're working with and will obtain and pass along to all their agents. Guys, in your offer, here's standard REBA related or attorney approved language. Please include these in your offers. If not, an agent can reach out directly to the attorney that they work with for recommended language.
So that's smoke and CO language. Is there other language around for the standard offer form, there's usually a financing contingency, a mortgage contingency box that historically just been checked and you fill out a few fields. Is there additional language for financing and lenders? And does that come from an attorney or is that coming from lenders? Where should brokers and agents reach out for that?
Nothing has materially changed as far as financing. What I would, specifically recommend, a lot of our lenders, they have kind of a questionnaire to a borrower at the time of closing. So once you get a purchase and sale sign, which is usually about 4 or so weeks out from the date of closing, a borrower will then submit their formal application to their lender. And so 4 weeks lapse between application and closing, a lot of lenders, to kind of fill in that gap and analyze changes to the borrower, will have a questionnaire form. Have you remained employed? Are you anticipating being deferred or your compensation being reduced? They'll have a written verbal questionnaire, yes or no's, et cetera. I have seen more lenders adopt that type of analysis in a questionnaire to ensure that their borrowers remain employed, because we know that there's been a significant number of layoffs, people being deferred, et cetera. So the lenders are significantly more concerned about adverse things happening to their borrowers in light of this current times in COVID. So what I would strategically recommend to agents is, between the buyer's commitment deadline, which after that point a buyer's funds become non-refundable if they don't proceed, there is additional language that helps to provide some latitude in the event that a lender can't perform, something happens COVID related, that the buyers and sellers agree to extend the closing date. It doesn't necessarily always flow that a buyer's deposit funds remain perpetually protected. So there is still a time period between commitment deadline and closing where something could still happen to a borrower and they can lose their job. And losing a job because of COVID isn't necessarily a guaranteed protection. So I would just advocate for agents to have a short window of time between a commitment deadline and a closing date. Sellers want to see a larger gap in time, but given this time frame, if you can get your commitment to closing date to be closer to 3 days a week as opposed to multiple weeks on end, that's better, because a lot of things could happen to a borrower related to their job finances between a commitment deadline and a closing date.
Well, Kyle, thank you for your time here, and hopefully we'll be able to check in with you again in the future for an update as the new normal continues to evolve. So thanks again for your time.
Sure. I'd say reach out. We can have a conversation. Things change on a daily, weekly basis, so I'm sure there'll be more to talk about.